Hi guys, this is Lee with the Market Sense for the week of December 17th, 2019. We usually record these on a Tuesday and they're published on a Wednesday morning usually, and the next two Wednesdays are holidays. So you can anticipate the next one of these will be done on January the 7th of 2020 and available to you on the 8th. I very rarely trade the last 2 weeks of the year anyway, and so that's the way we'll do this. Hope you have a great new year. The charts in this presentation are brought to us by Gettess and the Trade Navigator software. And we will look at a weekly bond market chart here, although I think what we have is a shrinking market. We've kind of got a gigantic sideways pattern started right here, which kind of wiggles around and is getting smaller. I, I can't tell you they won't break out, but I really don't expect them to. I think the sideways will continue. We're looking at 158.13 up here and about 156.06 here is the closest potential resistance and support, respectively, that we're looking at. But unless they go below 155 or above 160 and a half, there's really nothing going on here. I will say if they do break down, or if they do break, it's probably going to be down because of some concerns about debt problems in China. There's always discussion, oh, they're not going to buy any more U.S. debt, and that's the current discussion. It could cause a little fluctuation for a little while, but again, I really think sideways is the greatest likelihood, and going into the end of the year, trading thins out a bit anyway. Stocks, on the other hand, have a tendency to rally both into Christmas and in the week between Christmas and New Year's. Now, that's strictly a tendency. It's not something I would trade off exclusively, but if you do intend to trade anytime during that period, you should probably be looking for reasons to buy just because you have that sort of tendency behind you. And beware that we've been up a long time and a long ways, so it could be a little bit too difficult to buy. I don't want you chasing the market to buy it up here, and that's what we're not doing. We would look at support this week as being roughly 31.43, and I don't think that's going to look very attractive if they get down there now. They've already gone higher. The upside target is around 32.03, which they have already been to. Not going to surprise me if they go through that and go higher, though. There's just not much of anything to be done with a market that's going this strongly up. And except for this little break here a couple weeks ago, there's just been no opportunity to buy. They're just sort of grinding along, barely trading support ever, and they haven't traded support this week. It's very positive. It's probably going to run out of steam at some point with no warning. At this point, there is simply no signs that there's any reason for this to stop, and they're probably not going to ring a bell and let you know that there's a reason. It's probably going to end rather abruptly, but maybe for some shocking reason, something we don't see at the moment. I don't know, due to impeachment or what have you. I really can't predict that. But at this point, you can't step in front of it. You simply don't need to be the hero that tries to predict the high. So if you get a chance to buy support someplace, fine, you can do that. But I wouldn't stay with trades very long because, again, this rally is a little long in the tooth. And then again, the last 2 weeks are awfully thin, usually trading a little bit erratic. So better time to preserve capital than make any. So that's what we've got for you today. I hope you can find something profitable to get yourself into, and I hope you have a great